YouTube, what's going on? Zach Brittain here with Phipps Brittain Real Estate, and today's video is all about investors. We're going to go through our 6-step process so that you as investors know exactly what we do to create our investor action plan. This is super powerful for newer investors or anybody looking to invest in real estate, so you understand where you're at now and exactly what steps you need to take to start building out and growing your real estate portfolio. So without further ado, let's get right into it. Now investors, this is super important. The very first thing that we do for our investor action plan is to set goals. And this cannot be underestimated. It's a super valuable component of being a successful investor, is to understand what your short-term and your long-term goals are. What's your 5-year goal? What's your 10-year goal? What are your dreams? We can start establishing what those actionable items actually are and exactly what your end goal is so that we can reverse engineer and work our way backwards. Is it to generate enough cash flow so you can quit your job? Is it to save up or create enough wealth so you can send the kids to school or you can retire early? These are all really common, but it's different for everybody. So getting specific on what your actual goals are as a real estate investor makes our job a lot easier, so we can walk you through where you're at now, what the end goal is, and then work our way backwards so we understand every step in between. So do not underestimate the power of goal setting and tracking, and that's something we really ingrain for our real estate investors. Now, the second thing we take our investors through for their action plan is starting to build your team. Now, a lot of people originally reach out to us as realtors and investors because we have a lot of experience and we typically have the network. But for you as an investor, it's really important to understand which team members are the most important for you. As an investor, you may bring skill sets like construction and renovation experience, or you may have experience in financing, or maybe in acquisition and negotiating properties, but you may not have the time or the energy or the resources to do everything that you need to be a successful real estate investor. So first and foremost, a realtor like myself and my partner Matt can be a great resource and a really key team member, especially for newer investors, because we have the network and the experience to start and build and grow a real estate investing portfolio. After that, you can look to add team members or build your network with people like mortgage brokers, financiers, private money sources. These start to establish what your numbers are going to be, what your financing options are for the types of projects you want, and can overall be helpful to have multiple people in your network that can give you access to lending or can help you with your mortgage financing, especially for your first couple projects. After that, adding people like a great lawyer to handle all your legal questions in your closings. Awesome to have. A good accountant. We can't advise on taxes, we can't advise on structures for corporations and stuff like that, but your legal and your tax team, these people can really help streamline and help set you up for long-term success. The last thing you want to do is not consider what your end goal is and how those end goals should be set up on the back end. Getting all that set up properly the first time when you're starting to build and grow will save you not only a ton of money, but a bunch of time and stress as well. After that, you can start to look to add people like contractors, handymen, property managers, and everybody else in between. These will help really round out your team depending on the types of projects and investment properties you're doing. If you're doing lots of renovation projects right away, having multiple people on your roster or starting to build out that network of trusted contractors will really help streamline and improve the success of your renovation and construction projects off the beginning. So it's super important to understand what team members you need, as well as which ones that you may be able to take on. As a newer investor, you'll be wearing a lot of hats off the beginning, I suspect. And that's awesome, gets you great experience. But as you scale and grow, you can't do it alone. Make sure you get the right team. Whether you're experienced in real estate investing or owning real estate or just getting started, number 3, financing on our investor action plan is super important. Understanding what types of financing options you have available, as well as what types of rates and requirements to get that financing is really important to not only understand your current financial position, but what financing options are available to you now and in your next few properties. If you're looking to scale, looking at what you have available now and all the financial components is important, but also understanding the implications of making your next deal on future deals that you would like to get into to grow and reach your long-term goals. Now, when you're newer, or if you are just looking to get a better understanding of what your current financial position is and how financing works, a few key components that you should really know off the top of your head are: 1, what down payment amounts do you have available and what are the sources of those down payment amounts? Second, understanding renovation costs and how you're financing those are going to be really important to understand so that you can start to analyze and understand how profitable potential deals are. From there, you can also understand things like your current income, the nature of it, how much of it, and how you can prove it, as well as understand your tax liabilities and your credit score. These are components that will either negatively or positively impact your financing options. And what I can tell you from experience is there's always somebody willing to finance projects. It's just a matter of how risky, how much down, or what types of rates you're going to be looking at. But in my experience, there is always a way. As an investor, it's really important to understand what different sources and options for financing you have. And like I just mentioned, there is always a way to get financing. It's just a matter of potentially how risky or expensive it may be. Your first stop for the majority of newer investors is going to be a conventional A mortgage with a big bank or a big box store, potentially contacting through a mortgage broker or a trusted representative that you have at the bank. Your second option is probably going to be B lending or alt lending. The rates are typically a little bit higher, potentially a fee involved with it, but again, they may be willing to touch deals that are slightly outside the requirements for what an A lender would be willing to look at. From there, there's always private financing options, much more flexible, a lot quicker, a little less friction, but in exchange, you're likely going to have to pay a little bit extra for those types of properties or those types of financing, sorry. Other than that, you can look at JV partners, you can look at equity partners, or you can look at just cash. If you got a bag of money and you're looking to just use that. But it's really important to understand the implications of all these different financing options and how they could positively or negatively affect your current and your future investment opportunities. Understanding if you're tying up too much capital or if you're financing too much of a project that you're working on now could sacrifice or could give up opportunity cost, and you would not be able to be actionable on future or current deals that are available in your market. And this is why it's really important to understand what your goals are and building your team out first so that you can have the right people to advise you based on what your current situation is and those goals that we've already set out for you. The financing component is typically the most fluid for newer and intermediate level investors. So understanding the implications of your current financial position and your next property or two is my advice to better position yourself to succeed and actually scale and build your real estate portfolio. Now, step number 4 in our investor action plan is to define your target opportunities. We've already set your goals, so we know where you're at now and where you need to be in 10 years, 20 years, whatever your goal may be. You've already consulted with everybody in your team, your realtor, your lawyer, your accountant, your mortgage broker, and financiers. And we've already walked you through and narrowed down all of the top financing options for you, whether it's private, B, A, JV partner, whatever it is. So now that we have your numbers set up from your financing options, we can start to figure out what is the best deal available for you and your financing options and your goal in today's market. Considering key factors like price, condition, location, type of investment property, and your goal. Are we looking for cash flow? Are we looking for forced appreciation? Are we looking to build equity? What is most important to you and what is going to position you to move from that next deal into your next one as quickly and as effortlessly as possible? Last thing we want to do is tie up capital or choke your financing ability on just one deal if you're looking to go do 10 or 5 or whatever it may be. So we want to think those 2, 3, 4 steps ahead so that this one deal isn't going to jeopardize your long-term growth. Now, the 4 most common types of investment properties in our market in Waterloo Region are single-family opportunities. This is where you just buy one property, rent it out to one tenant. This is typically a little bit less maintenance because you don't have multiple things going on and fairly straightforward. The second would be a multi-unit property. This is when you have more than two or more units in a property, more tenants, typically a little bit more maintenance and a little bit more work because it's multiple under one roof, but again, sometimes offers higher potential for cash flow or appreciation depending on the project. After that, you could also look into pre-construction. Pre-construction opportunities and investments have become much more popular in Waterloo Region as more condo developments and more suburban residential developments have really started to get cooking in our area. If those aren't options for you or you're looking for something else, the other common ones are flipping or wholesaling. This is typically considered maybe a little bit more risky, but if you have your goal set up, you have your financing and your team in order, then these are options for you to build, a little bit quicker in and out projects where you're building a little bit more cash. Typically, flippers will use that cash to go roll into longer term projects or bigger projects to offer a better return. Now, it's really important to understand all the options that are available to you, but if we've already worked through your goals, built your team, understand what your financing options are, and started to identify those target opportunities, the target opportunities should reveal themselves to position you to succeed. Number 5 on the investor action plan is actively view and acquire the right types of deals. So this is the practice of actually acquiring that deal that you've been looking for. We've established the goals, the financing. We've figured out what target properties are going to be the next best acquisition for you to scale and grow your portfolio. And there's a few things in this kind of part of the action plan that we really need to stress. Think of it as becoming the expert for that target property. It could take you a week, it could take you a month, but at the end of the day, if you become an expert for this target market or this target property, then you are going to know exactly what types of offers and what types of price points and situations are going to offer the best deals. Now you're saying, you know what, Zach, we're hiring you as our realtor, or we're working with a realtor that should be doing this for that. You're absolutely right. If you're not the kind of investor that needs to, be an expert in that type of market, you just need to look at the numbers and understand those types of deals. That's great. We are your market expert. And what we can do for you is preview listings and send you the ones that we think are actually going to be the best potential deals. If that's not an option for you, then you need to do a few things as an investor. Number one, you need to get set up on a specific saved search to update you via email right from your realtor system. This is the best way to get the listings as soon as they hit the market, so you can run your numbers quickly to make sure it's a good opportunity and then go book a showing to view it as quickly as possible. If you don't have a saved search set up and you're not viewing listings right away, and you're not going to actually go view them in person, and you're not in a position to offer on them right away, you're going to miss out on deals. You're going to be competing with people that are more prepared and more experienced and better at finding those deals, like us, and we're going to beat you out. Or you're going to overpay for the property and it's not going to be profitable for you. So it's really important to get the system set up that matches your criteria, that you've already verified with your financing, and run your numbers to make sure that those deals make sense for you right now. Then you need to go consistently view the right opportunities. This will help you understand what would be a good opportunity, which types of houses or properties may have less action on them, or which ones you may be able to bring an offer as quickly as possible and beat out some competition. These are all key factors that we're looking at and thinking of when we're previewing listings online and going to see them in person, either on behalf of or with our clients. And these are things that you should be practicing as an investor to make sure you're prepared and actually acquiring the right deals. Last, number 6 in our action plan for investors is managing the property after you acquired it. Now, for those of you that are looking to do renovation projects, forced appreciation, and burring, I'm not going to get into how to manage contractors, how to book them. That's going to be for other content and a much more detailed conversation. And honestly, that's a very much so a case-by-case basis. What I really want to focus on is actually acquiring right tenants if you're going to be holding the property and tenanting them, and then managing the home itself. Now, we have a tenant screening script and process that we can take all of our clients through, and for newer investors, that's something that we can help out with. And that's something that you as an investor should already establish that you're going to take on before you acquire the property, because we're going to price that into your model to understand how profitable a potential home is. So you already know if you're paying a property manager to do it, this is how it affects your profitability on a month-to-month and an annual basis, so you can figure out if it's a good deal or not. Now, if you're going to be wearing many hats like most newer investors are, or that's a responsibility that you would like to take control of, screening your tenants is going to be the best way to ensure that you get the right people in your home. As investors or people in real estate, you have definitely heard some nightmare stories about tenants ruining the experience as investors. And honestly, that's one of the most common complaints that we have from other investors, is how annoying tenants could potentially be. And the reality is, you cannot necessarily control that, but you can do everything that you can in your power to make sure that you're getting the right tenants in and you're managing them properly so everybody's happy. So if you're going to be doing that yourself, go through a tenant screening process over the phone, in person, making sure you're asking the right questions, you're doing credit checks, employment checks, reference checks, and that the profile of the person you're getting in the home makes sense for the profile you have in your mind that you would like to actually manage, and position the property to actually be a good investment long term. If you're paying a property manager, then it's as easy as pricing that into your model to make sure that the profitability of that investment property actually makes sense for you to hold long term and pay a property manager to do it. But I cannot stress enough how important it is to get the right tenants in your property and to manage them properly. So if you want more information on how to actually manage your tenants properly, or just get a property manager, then that'd be a great question to reach out to us. So that is the 6-step action plan process that we take all of our investors through. Again, this is super powerful for newer investors or people looking to revamp and take their investment strategy a little bit more seriously coming into the new year. If you have specific questions on this video or the topics that we touch on, we go into much more detail when we speak with our clients or our investors on the phone or an in-person meet. You can ask your questions in the comment section below. We also have a link back to our contact us and our personal contact information in the description. You can reach out to us directly to book a call or to ask your specific questions, and we'd be more than happy to help you. For everybody else, thank you so much for watching the video. Please make sure you hit that subscribe button, turn notifications on, and check us out on our Facebook and our Instagram, where we drop more information on investor topics, deals, and projects that we're working on right here in Waterloo Region. Thanks so much, guys. We'll see you soon.